Beginner's Guide to Alternative Data Investing with AI. Explained simply, most investors think making smart investing decisions comes down to analyzing company earnings reports, reading balance sheets, and following Wall Street news. But what if I told you that the world's top hedge funds, the billion-dollar giants like Renaissance Technologies and Two Sigma, are no longer relying only on those traditional methods? Instead, they're turning to something far more powerful: alternative data powered by artificial intelligence. And the good news is, in 2026, this technology is finally becoming accessible to everyday investors like you and me. So today, we're going to break down exactly what alternative data is, how AI makes it insanely powerful, and how you can start using it to find smarter, faster, and more profitable investment opportunities, even if you're a complete beginner. Let's start with the basics. When we talk about data and investing, most people think about traditional data, things like company earnings, quarterly reports, revenue, debt ratios, and price-to-earnings metrics. This information is important, of course, but it's also public. Everyone from small investors to massive institutions has access to the same data at the same time. That means there's no real edge anymore. By the time you or I act on it, the market has already priced it in. That's where alternative data comes in. Alternative data means non-traditional information that gives you insights into a company SRE world performance before that information shows up in official reports. Think of it as a sneak peek into the future, a way to see what's happening in the real economy in real time. Examples include satellite imagery showing how full retail parking lots are, credit card transaction data revealing spending patterns, shipping data that tracks global supply chains, weather patterns that could affect crop yields, or even social media sentiment that shows how consumers feel about a brand. Now imagine you had access to all that information, but here's the catch. The amount of data is so massive that no human could possibly analyze it efficiently. That's where artificial intelligence steps in. AI can process, clean, and interpret these enormous data sets far faster than humans ever could. It can detect subtle correlations, patterns, and market signals that would otherwise go unnoticed. For instance, AI might notice that searches for electric bikes are surging in certain regions, or that positive online sentiment about a company's new product is spiking weeks before their quarterly earnings report. These kinds of signals can give investors an early edge, a chance to position themselves before the market catches up. So how does this actually work in practice? Let's say you're looking at a company like Target or Walmart. Traditional analysis would focus on their quarterly earnings and same-store sales growth. But with alternative data, AI could analyze satellite imagery to estimate parking lot traffic at each store, track online transactions to see whether sales are increasing, and monitor social media chatter to gauge customer satisfaction. If all three of those indicators are trending upward, you might have a strong clue that their next earnings report will beat expectations, long before it has officially announced. This is exactly how some of the most successful quantitative hedge funds make money. They combine hundreds of alternative datasets with machine learning models that constantly adapt to new information. These models can identify predictive patterns, like how certain search terms correlate with stock price moves, or how weather changes might affect energy demand and commodity prices. It's like having thousands of analysts working 24/7, except instead of humans, it's algorithms trained to learn and improve over time. But here is the exciting part. You don't need a Wall Street office or a PhD in data science to benefit from this anymore. In 2026, retail investors have access to AI-powered investing tools that do much of the heavy lifting for you. Platforms like Numerai, Caveout, and others are offering AI-generated insights based on alternative data analysis. Some brokerage apps even integrate AI indicators that use alternative data behind the scenes to provide real-time buy or sell suggestions. It's democratizing access to the kind of intelligence that was once reserved for elite institutions. So how can you, as a beginner, start using AI and alternative data in your investing journey? The first step is to understand what kind of information matters to your strategy. For example, if you're investing in consumer-focused companies, you might want to pay attention to online reviews, credit card spending data, or social media sentiment. If you're interested in agriculture or energy, satellite imagery or weather trend data could be more relevant. Once you know your focus, you can start exploring tools that aggregate this data and present it in an understandable way. AI can then take that data and identify patterns you might never see on your own. For instance, It could find that when online mentions of a company rise by more than 20% in a week, the stock price tends to rise the following month. It can analyze years of historical data to verify whether that pattern is statistically significant. That's something humans would need months or years to figure out AI. Does it in seconds? However, here's an important point. AI isn't a magic crystal ball. It's a powerful assistant, but it's not foolproof. Even the best models are only as good as the data they retrained on. Garbage in, garbage out. That's why the smartest investors don't use AI blindly. They use it to enhance their analysis, not replace it. The human element, judgment, patience, and emotional control is still essential. So if you're thinking of getting started, start small. Experiment with AI-based investing platforms. Study their signals and compare them to traditional financial analysis. Over time, you'll begin to understand how alternative data can help you see opportunities that others miss. And remember, just because AI highlights a stock doesn't mean you should buy it immediately. Always do your own due diligence. Use AI to generate ideas, then verify them with fundamental research and market context. Now, let's talk about the future. As AI continues to advance, the quality and variety of alternative data will explode. We're already seeing AI systems that analyze voice tones during earnings calls to detect executive confidence or hesitation, or tools that track ESG-related data from satellite pollution sensors. Soon, we might see AI predicting the financial health of entire sectors based on energy consumption or regional spending habits. The possibilities are endless, and those who learn to use these tools early will have a huge advantage. But here's what's really interesting. While big institutions will always have more data, individual investors have one thing they don't: flexibility. You can move faster, adapt quicker, and focus on niches where AI gives you an informational edge. You don't need to beat the entire market. You just need to find better information than most people around you. That's what alternative data and AI make possible. At the end of the day, investing success comes down to having the right information at the right time and the discipline to use it wisely. AI can help with the first two, but the third part, discipline, is up to you. So as you start experimenting with AI-based investing tools, remember to stay curious, think critically, and never stop learning. If you found this breakdown helpful, don't forget to hit that like button. It helps more people discover content like this and supports the channel. Make sure to subscribe and turn on notifications so you never miss a new episode. Every week, we explore the most powerful strategies in modern investing, from AI tools to behavioral finance and wealth psychology, all designed to help you take control of your financial future. And now I want to hear from you. Have you tried any AI investing platforms or alternative data tools yet? Drop a comment below and share your experience. Whether you're brand new or already experimenting with AI-driven strategies, I love hearing your insights. And if there's a specific AI investing topic you want me to cover next, mention that too. It might be the next video on this channel. Because the truth is, the future of investing won't belong to those who simply follow trends. It will belong to those who understand how to interpret data before the rest of the market does. That's what AI and alternative data make possible: smarter, faster, and more confident. The tools are already here. The only question is whether you'll start using them now or wait until everyone else has caught up. So if you're ready to think like a modern investor, embrace the technology shaping the markets, and grow your wealth with intelligence, you're in the right place. Hit that subscribe button, stay tuned, and let's keep learning how to make money smarter, not harder.